Hey, what's going on YouTube? Welcome back to the channel. If you're new here, do me a favor, consider subscribing. And if you find value in this video, do me a favor and smash that like button. So in today's video, we're going to be reviewing 3 of the best programs/lenders for first-time homebuyers. Because on this channel, we talk about banking data points to help you save money as well as gain access to funding. Now, before we get into the programs and lenders at hand, first and foremost, congratulations on taking the first and necessary step, in my opinion, of understanding home financing. Because most first-time home buyers review homes online, go see it in person, and then link up or connect with a real estate agent who's going to persuade them into drafting up an offer without ever going over their financing options. So first and foremost, congratulations to you on going over your financing options so that you can make the best decision for you and your family. All right, so without further ado, let's just jump right into these lenders. All right, so the first lender and program that I want to introduce to you as a first-time homebuyer is going to be Fannie Mae's Home Ready program. Fannie Mae's Home Ready program is a low down payment mortgage, and it is designed to help lenders confidently serve today's credit-worthy low-income borrowers. Now, this is a conventional home loan with low interest rates. Matter of fact, it's probably some of the lowest interest rates that you're going to find in today's market because Fannie Mae is backing this. And Fannie Mae is a government-sponsored entity. Now, this is going to be better than an FHA home loan program, not because of the down payment starting at 3% and an FHA starting at 3.5%, but because of the overall cost of an FHA loan versus a conventional loan. Now, FHA loans have higher closing costs because of something called an upfront mortgage insurance premium factored at 1.75% of your overall loan amount in comparison to a conventional loan, which doesn't have any upfront mortgage insurance premiums. So that's going to save you thousands of dollars at closing, still with a competitive interest rate and with a low down payment of 3%. Now, the lender of choice that I have for this particular program is going to be Rocket Mortgage. Now, Rocket Mortgage has a very intuitive, easy to use online application, and their guidelines when it comes to the Fannie Mae Home Ready program are very straightforward and it's very cookie cutter. If you have the documents, if you have the FICO score, and if you have essentially the track record when it comes to credit-worthy history, then you're going to get approved for this home loan program. Now, loan limits for conforming areas go all the way up to $726,000. And for higher cost areas, you go all the way up to 1.1, just shy of $1.1 million. Now, your collective household income must be equal to or less than 80% of your county's area median income. And what I'm going to do is I'm going to link this nifty tool that you could use. So what you're going to do as an example is you're going to type in the address of the home that you're looking to purchase or any general area. That's going to pull up your area median income. So for this specific area, 80% is going to be $84,160 in order to qualify for the Home Ready Income Program. Now, max debt to income ratio is going to be 50% on the back end. So how this simply works is all of your front end ratios and expenses is going to be anything that is associated with your housing payments. So we're talking about your principal and interest loan payments, your insurance, your taxes, your private mortgage insurance. That needs to be within a certain ratio. And then on the back end, what we're going to do to add to that front end ratio or to add to those housing expenses is we're going to factor in your installment payments. So your car loans, student loans, personal loans. And also we're going to include all of your minimum payments on your revolving credit accounts. So your credit cards and other revolving accounts that you have listed on your credit report. Now, nifty little pro tip, if it's not on your credit report, then it's not going to count towards your debt to income ratio. Now, for this program, since you're putting down less than 20%, private mortgage insurance is going to be carried on this home loan program, and that factor is going to be 0.4% of your loan amount if you're putting down less than 5% down. Really great program and lender. I will link all of the websites in the description box below. Now, coming in at number 2, second on the list is going to be PenFed Credit Union. PFCU also has conventional home loans, and their starting rates are as low as 6.125, which is a great competitive rate in today's market. Now, of course, depending on when you're watching this video, interest rates will fluctuate. So interest rates 6 months, 2 years, 5 years from now are going to be different than listed on this video. So definitely plug into this credit union to see what their updated rates are. Now, their home loan programs also go all the way up to $726,000 with a down payment of 3%. And you have a set rate for the life of the loan because it's going to be a fixed rate loan, and that's typically going to be for 15, 20, or 30 years. Now, what's really advantageous about this credit union is that they are qualifying borrowers with 1 year's worth of W-2s. Now, this is very advantageous because typically how home loans work is they'll request 2 years of W-2s, tax returns, etc., and then they will average the income off of both years. So if your first year is lower than your second year, then your overall purchasing power is going to be decreased. Let's just say you made $80,000 the first year and $100,000 the second year, your overall average income is going to be $90,000. Now, since PenFed is only requesting 1 year's of W-2s, typically that's going to be your higher income year, and they're going to be basing your income off of that one high income year. Now, you still will need 2 years of work history, but they're only going to be deriving or taking that income off of that 1 year of your W-2s. Now, their credit scores are starting at 650 or higher. And remember, the higher your FICO score, the lower your interest rate is going to be. Proof of income is going to be typically 1 to 2 months of your pay stubs. And this needs to be in alignment of your W-2 income as well too. Check out PenFed, and I will also list all of the website links in the description box below. Now, last but not least, we have Navy Federal Credit Union. Now, in order to get a home loan with this credit union, and also the other one as well too, you need to be members of the credit union. Now, Navy Federal is typically reserved for military veterans or active service members, but you can get into Navy Federal if you are living with a military member and you share the same household address, or if you're closely related to a military member, and also if you're related to a Navy Federal Credit Union member as well too. Now, if you can make your way into Navy Federal Credit Union, they have really great programs for first-time homebuyers. Two specifically, one is going to be the conventional fixed rate mortgage. Now, their conventional program has a starting interest rate of 6.125, just like PenFed. Minimum down is going to be 5%, and you could do 10 to 30-year terms. Now, the program that I want to introduce you to on this video is going to be their Home Buyer's Choice program. This interest rate is going to start at 8% in today's market, but what's really cool about this program is there is a 0% down payment requirement. Term goes all the way from 16 to 30 years. So let's take a deeper look into Navy Federal's Home Buyer Choice program. Navy Fed's Home Buyer Choice loan, no money down, no down payment required. We want you to realize the dream of home ownership now without years of waiting to save for a down payment. Yes, 100% financing is offered on this particular program. They have fixed rates with consistent payments, no private mortgage insurance required on this program, no refi rate drop. So that simply means that when the interest rate of 8% drops in the overall market, then you can benefit in that rate drop without having to pay for expensive refinances. All you have to pay is a one-time fee of $250, and you could do this up to 2 times per year. So if we are in a rate dropping environment from 8 to 7 to 7 to 6 to 6 to 5, you could drop it all the way down as low as it can go. And if we are going to match rates in comparison to 2020, 2021, you could drop your rate all the way down to 2 to 3% without ever having to pay for a refinance. Now, they have a 30-year fixed rate option for conforming loan limits, which is going to be at $726,000 or below. And they also have jumbo loans as well too, or in higher cost areas like Los Angeles or New York. Check out Navy Federal Credit Union. They are a great lender with fantastic options for all of their members. I will link all of the banking and website information again in the description box below. And if you have any questions about this lender or any other lender on this video, do me a favor, comment below. And if you haven't done so already, go ahead and subscribe to the channel, like the video, and thank you so much for watching yet another one. And I'll catch you guys on the next one.